the roundtable number 4 at the BizzTech's FinTech After COVID-19 event. And our topic today is where crypto will stay after the crisis. We have an awesome lineup of speakers today. I'm very, very excited to work with this group today. I think we're going to get some amazing content, and hopefully the audience enjoys it as much as I will. So with us today, we have 6 speakers. We have Lex Sokolin from Consensus. Thanks for being here, Lex. Fabiola Huerta from CV Labs. Pawel Sobotkowski from New Digital Street. Robin Z from Tidy Sun. Hopefully I said that right, the company.
Absolutely.
Excellent, wonderful. Mauro Andriotto from EDSX and Norbert Gerke from Toyo FinTech. So thank you so much for all of you being here. My name is Jason Shuster, and I'll be representing BizzTech today. And as the host, I will hopefully be doing the least amount of talking and let the experts actually do all of the talking. So today, we're talking about where crypto will stay after the crisis. To get us started, though, I'd like each of you to take about 60 seconds to tell the audience who you are, just a little snippet of your background, just so the audience kind of knows where you're coming from, where your perspective is coming from, and then we'll go ahead and get started into the first topic. Who would like to get us started? Norbert, how about you get us started today? Just give everybody maybe 60 seconds on who you are and your background.
Good, Norbert Gerke. I spent most of my career in capital markets technology. I built trading architectures front to back for Goldman Sachs and Barclays. From that, I spent last 20 years, half of it in New York, half of it in Tokyo. We're back now in Tokyo, where I founded Tokyo FinTech, which is bottom-up, community-driven organization to help educate people on everything broadly FinTech, of which then blockchain crypto is a part, but it's not entirely what we're doing, simply because I believe that if people don't understand, then we can't innovate. Back to you, Jason.
Absolutely. Thank you so much. Robin, how about you?
Sure, my pleasure. Thank you for including me. So Tie-Dye Sun Group, we started 30 years ago, actually as a manufacturing firm, and we once served as their manufacturing partner for Sony Corporation. That was 20 years ago. So 10 years ago, we started the transformation from high-end manufacturing of their distributed disk and also their screen board to software to build their distributed software network architecture system. So that's basically how we ventured into blockchain back in 2008. And that was 1 year before the birth of Bitcoin. So we took a lot of detours in the architecture, but right now we own and operate one of the largest fiat to Bitcoin exchange in Hong Kong. And also we are working on some really cool asset management projects. We are gaining exponential growth in Japan and South Korea, and of course, China and Southeast Asia. So.
Excellent, wonderful. Thanks. Glad to have you here, Robin. Mauro, how about you? Would you like to go next?
Yes, I'm a professor in finance in Italy and Switzerland. I'm a jury member of the European Innovation Council, so I help Europe to understand which are the innovation and companies that are going to get financed by the European Commission up to 17.5 million. I am the former quantitative leader of EY for the South Europe. I'm an equity partner of pretty big family offices here in Switzerland. We are in 15 countries, Russia, Middle East, Switzerland, and South America. And I am the founder and CEO of EDSX, that is the European Digital Asset Exchange that takes care of primary and secondary listing of security tokens representing traditional financial securities.
Excellent, wonderful. Glad to have you here, Mauro. Fabiola, would you like to go next?
That's my turn. Well, I'm Fabiola Luna. Now I'm based here in Zug in the Crypto Valley at CV Labs. CV Labs is the biggest hub for blockchain here in Zug. So we have some of the biggest protocols and projects. Everything basically started here, so the ecosystem is quite big. So I manage and support the ecosystem. And my background, I had been always working in the space, previously in a blockchain security company. So as well that that industry is quite important here in Switzerland, and we have plenty of good security experts in the blockchain field. So in short, that's my background.
Excellent. Wonderful. Glad to have you here today. Lex, how about you next? Introduce yourself.
So I'm Lex Sokolin. I'm the Global FinTech co-head and the Chief Marketing Officer for Consensus. Consensus is a blockchain software company which is known primarily for its association with Ethereum, founded by Joe Lubin, who is also one of the founders of the Ethereum project. So we focus on everything from financial infrastructure to developer tooling and ways to get people up and running, writing software and putting projects into production on programmable blockchains. By background, I've done a lot of different versions of fintech entrepreneurship. So, today I think digital assets and the manufacturing of financial instruments and decentralized finance are the key themes that are transforming the industry. Whereas, look at a decade ago, it would be things like robo-advisors and neobanks and starting to think about artificial intelligence. And so in a prior life, I was a CEO and founder of a robo-advisor in the States, which later became a digital wealth platform.
Excellent. Wonderful. Really glad to have you here today, Lex. And last, Pawel, go ahead and introduce yourself to everybody as well. And then we'll get going on our first topic.
Okay, hi, I'm Pawel. So I'm an independent consultant, mostly in the fintech and blockchain industry, helping and advising startups and also SMEs and bigger companies in the blockchain space a lot. Also in few associations that are supporting building the ecosystem, mostly in Switzerland and Europe. So I'm based in Zurich. Fabiola from many events in the Crypto Valley. So yeah, and generally I'm also invested in some blockchain projects and building the strategy and expansion on the other markets. And in New Digital Street, I'm helping guys on the consulting part. We're mostly cooperating with banks and also fintechs and building the structure and the business on the innovation projects and products.
Excellent, wonderful. Glad to have you as well, Pawel. This is an amazing panel. I'm really excited for all of you being here. So let's actually get moving. Now the format today, because we've got six speakers and we do have to end at 5 minutes to the hour. I'd like it if everyone try to keep answers to each topic about 1.5 minutes to 2 minutes. I know that that's not a lot of time, but I know that with this panel here, we're going to cover a lot of information. And I'd love it if we could get through all the topics and get everybody a chance to share their thoughts. But anyways, let's keep going. So besides the pandemic, Bitcoin has had multiple chances to really shine and become really a lot more mainstream. But some would say that it really hasn't. What are your thoughts on whether it has or hasn't, but also why? If you also believe that it really hasn't shined like it should have, why is that? In no particular order, whoever would like to get us started, go ahead and get us started, and then we'll make sure to get to everybody. How about Fabiola? How about you get us started?
I mean, well, I think it depends all on the expectations, but so far what I have heard from experts here in and companies in the Valley is like, somebody mentioned somebody managing a crypto bank mentioned some years ago when I was talking to friends, over the table, like, oh, you know, cryptocurrencies, Bitcoin, and they were not interested. People was totally resistant. And now people is starting asking proactively on how they can get involved. So personally, I think Bitcoin did shine. And what I see, at least from people close to the circle, is like that more and more outsiders are getting curious. Probably they are not going and putting big amounts of money into it, but yet they are more interested. Definitely it is at the beginning, like in real honesty, mainly the ones that were owning crypto is people with tech background, and they are really passionate about it. But now, at least here in Switzerland, we see more and more common people getting interested and acquiring their first cryptos. So yeah, from that point of view, I have to say the pandemic was positive, because definitely people got at least to read or to look at crypto as an alternative, especially Bitcoin.
Okay, I like that perspective. So you're saying it kind of has had a chance to shine a little bit. So that's good. I like that. Robin, I just saw you unmute yourself. Would you like to go next?
Sure, thank you. So I think that Bitcoin is really I would say the most successful experiment of the Internet of Money. And before we really step into your question about why it hasn't shined yet, actually my answer would come from a little bit different perspective. Is as my formal life, I'm actually an oil and gas engineer, and somehow I stumbled from oil and gas to Wall Street, and now I'm stuck in Hong Kong, of course. Anyhow, so actually several days ago, I encountered a person asking me that why oil price dropped to zero before Bitcoin does. I mean, this is a hilarious question, and why, if you really think about it, about all that governs the price of the supply and the demand, and you think what drives the supply and what drives the demand of Bitcoin, I think we would all have an answer. Because Bitcoin really is an experiment which is really on its way of fully into the everyday usage of what we have. So we can see that the Lightning Network is there. The payment system is yet not mature. It has a very good architect, but it's not that scalable. But really, as a storage of the money, it have people really to believe its values, and then to I think right now for Bitcoin to go through the $10,000 benchmark is for more institutional money to flow in, which is fairly obvious. So back to the topic, that why Bitcoin price hasn't dropped to zero versus why we see that a couple of months ago, the oil price actually dropped to zero, is the control of the demand, the control of the supply, I'm sorry. So in oil, we see that the supply really has a prisoner's dilemma, where the Saudis and the Russians, they tried to kill the U.S. shale oil. So we have that price war going on. And I think in the longer run, oil will never be able to recover just because of their disagreement, the prisoner's dilemma, stuck in the supply side. And then again, Bitcoin has a fixed supply, and now the mining just had their had that halving issue. And also, let's just say that the miners, they would never sabotage their own interest and do something automatically that shows a balance to the entire community. So judging on this, I would think that Bitcoin will definitely shine, if not now, definitely in the future. And that concludes my remark.
Wonderful. Thank you so much, Robin. I love the parallels between, or the relationship that you painted between oil and Bitcoin. I love that. Let's see, Mauro, I saw that you're unmuted. Would you like to go next? What are your thoughts?
Am I unmuted?
Yes.
Yes. Okay. Yes. Sorry. Yes. Sure. I can go. So in my opinion, I think that the Bitcoin has shined quite a lot in the last years, and I think that investors are a little bit impatient and would like to have a pair 10 every year. I think that at this time, in this right moment, currently there are at least two variables that should be considered for the Bitcoin price. The first one is an old variable that is about trust. And the other one maybe is a kind of, well, not really a new variable, but it's about liquidity. There is a lot of liquidity on the market, and this is why the stock market is keeping rising despite the earnings are keeping going low. In fact, the Standard & Poor's 500 price and earnings is at its highest of the last 20 years. However, history says that sooner or later the market comes back to its fundamental. And the decline in economic activity is another reason to be bullish, because this means that Federal Reserve and other central banks are going to inject more money and more liquidity. However, in order to have this money and liquidity to be invested on the Bitcoin, we also need the trust. So we need trust of people that use Bitcoin for general activities, but also that trust that Bitcoin is the new gold. And the fact that at the beginning of May, Paul Tudor Jones, the famous hedge fund, said that he has invested 1 or 2% of the total wealth of the hedge fund, that is around 22 billions in Bitcoins. This, let's say, keep me quite relatively, let's say, safe, or hoping that there will be a per 10 in the next 2 years. I would say that I think that as many other Bitcoiners and investors, that the number of people that will use Bitcoins will increase in the next year. Consider that now there are 55-60 millions of people that own Bitcoins, and this number is forecasted to achieve 200 million. Some people say at the end of this year, but we will see. So I think, I'm quite confident, and clearly I have also a little piece of my investment invested in Bitcoin.
Absolutely. Okay. I like that example of the hedge fund. I mean, 1% of that much, that's a lot of Bitcoin in a fund. That's interesting. Norbert, do you want to take us from here, and then Lex, and then Pawel?
Sure. I mean, I think first of all, Bitcoin has been probably the best performing asset in 2020 so far. Of course, it was from a relatively low base if you compare it to the all-time high. But I think, as we've seen also in 2008 in a downturn, all assets are correlated. And so Bitcoin took the hit, and we had the flash crash to under 4,000, which was, hindsight is 2020, obviously a great opportunity to get into this. I think when we talk about mass adoption, it has two components, right? One is the retail, one is the institutional adoption. And so I'm echoing Mauro's comments on the retail side. And I believe that things like Libra, when and if it comes with 2 billion Facebook users, is a game changer in terms of digital currency adoption compared to the 50-60 million Bitcoin wallets that we have. On the institutional side, you only seen yesterday that Goldman Sachs hosted a call for their private wealth clients, still debating whether Bitcoin is actually, or the digital currencies are an asset class by themselves. And they said it isn't. And for that reason, the client shouldn't invest. So while we see people like Paul Tudor getting in, others are still hesitant. JP Morgan has always decried it as a scam, is now servicing Coinbase in the US. Or do you see the slow adoption? And I don't think it's a question of people putting 80% of their assets into it, although historically, obviously, it would have made you tremendously rich. It's who came up with this? I think it was Pomp, right? Saying you need to get off zero, and getting off zero and realizing that it needs to be part of any portfolio, and if it's 1% of a large institutional portfolio, that makes a difference. I think we're getting there. For institutional players, custody has always been the hindrance, so you need to have that from a regulatory perspective, and there's enough vendors now in the market that solve this problem. So I don't think we're far away from that. We'll take another year or two.
Excellent, thank you, Norbert. And actually, I like that idea of it. Just considering it as it's another asset class for a portfolio, and getting away from zero. I like that. Lex, what are your thoughts?
Yeah, I mean, this is not a topic I'm super passionate about. I mean, I think Bitcoin's valuable, and any sort of like set of beliefs that people hold contrary to that at this point, I think is nonsense. It's been valuable for over a decade, and it continues to be valuable. And the arguments that people have about what it's secured by and fundamentals, I think at this point are just really stayed and settled. I think there's a question whether Bitcoin does the work of being a payment rail, and I think that question is very real. I don't think people dispute it being something like a digital gold or a store of value, and for it to be a diversifying asset in every portfolio that drives the Sharpe ratio up. But there's a difference between a cash allocation and a commodity allocation versus a payment rail to power an economy. And as you say, just looking at the thing on its face, that's not really happening. But I don't think we need to expect Bitcoin to do that. It doesn't have to still serve a really meaningful purpose, which is the transfer of large units of value between parties in a trustless environment. I think, at least for me, as no surprise given the consensus had, I find much more compelling the financial infrastructure that's being built on Ethereum, in part because Ethereum is literally made for creating financial infrastructure, right? So you can write your payment processor, you can write your portfolio management system. I think there's about 8 billion worth of stable coins now in Ethereum. And so economic activities being denominated in the digital dollar, of which there is 8 billion, something like 2 billion of which is floating around every month. So it's almost like I don't know what the premise is. It's a rhetorical question to say, like, why isn't Bitcoin doing the payment stuff? Because, well, why does it have to? I think it's serving a different function.
Excellent, great perspective, Lex. I appreciate that, and I'd like to come back to Ethereum a little bit later. Pawel, your thoughts, and then we'll move on to our next topic.
Yeah, so I definitely think it's very valuable. So if we, for example, take like Bitcoin as an investment in 5 years, based on the amount of $1,000, so it could be, the valuation is over $30,000 in 5 years. So it's the very big increase comparing, for example, to Netflix, that it would be only around 7,000. So even with the actions like that, that growing so fast right now in the pandemic time, yeah, this is a big chance for the crypto. I think it still needs much more time because there is a lot of very hypothetical use cases, and it's lacking on the market like more really solid cases. Even in the banks, this is not a very advanced topic, unless they're trying to have some exchanges internally on the banks using the cryptocurrencies, of course, with the Bitcoin as a leader in this. But I think the space needs more time. And in some markets, they are very advanced, like, for example, in Switzerland or in US, also building the digital national currency. So we heard about from Lex about digital dollar. It's also a concept of digital Swiss franc, and also some other currencies, mostly in Europe and of course in Asia and US. But yeah, it needs more time, and I think there is a lot of good opportunities, even right now, when we need to think about the cashless payments, or when most of the commodities that are going down right now. So it's very interesting time, I think, especially on the investment side. Yeah, if we choose the right path.
Absolutely, absolutely. And speaking of, it needs more time. The pandemic has created a lot of volatility in several markets, right? So I think short-term predictability is still pretty low amidst the pandemic. But what about long-term? Will this pandemic prove positive for cryptocurrencies in the long run? Fabiola, I saw you unmute yourself. Do you want to get us started on that?
Yes. In reality, I really think yes. Definitely, there is a before and after the pandemic. What I mentioned before, people is more receptive to it, is more curious, and the projects keep evolving. Some projects even increase adoption during the pandemic just because the people have more time. They have free time to get information, to read, and then to experiment. So as well, something that is curious is like the concept of digital money is now not any longer an option. I don't know what happened in other parts in the world, but for example, here in Switzerland, in many places, it was forbidden to pay with cash. It's like there were signs that say cash is not accepted. You were forced to pay with card or with the mobile phone. And this creates really this is really positive for crypto because people get more and more used to it, and people see it in a more natural way. So I definitely think the pandemic was positive, and we will see positive outcomes in the technology side and adoption side for blockchain and the crypto space.
Excellent. Good thoughts. Good thoughts. Who wants to keep it going?
Yeah, I can go on.
Yeah, sure.
So I think definitely, but we need to look on the long term. Definitely. So for example, even before this crisis time in Switzerland, it was possible to pay your bills with the crypto, or just using the Bitcoin ATM. So that was possible, and I think it grows even right now because of the fact that Fabiola mentioned that the payment was blocked to pay with cash. So the people try to find another ways, and I think it also gives a lot of interesting opportunity because right now during the crisis you need to very pivoting and iterating your business, and it gives a lot of opportunities for the crypto or blockchain implementation. And even that we see that the ecosystem is going a little down, so many crypto and blockchain projects, they collapsed and they need to fire a lot of people. But I'm observed that some projects they're going even much better than before the crisis. So it's just showing that if you find the right niche, so you can actually use that moment very well, especially if you're like fully digital company, because here this is very important for that case.
Absolutely. Awesome. Thank you, Pawel. Who wants to keep us going?
I'll go next then.
Yeah, absolutely. Thanks, Norbert.
Because we're hidden here components of cashless payments, etc. So Japan is a very interesting example, simply because among industrialized nations, only Germany has a higher utilization of cash. And so I'm a German in Japan, so I'm a cash expert rather than a cashless expert, I would say. And I don't think during the pandemic we've seen much of a drive towards cashless payments necessarily, quite different from the news that came out of London, where people calling the end of the ATM network because there's so few people pulling cash out of the ATMs that the fees basically no longer sustain the operation of the network. We're far away from that in Japan. We have only like 22, 23% cashless utilization. And I'm with Lex, I think, on the payment rails. I don't see Bitcoin as a payment mechanism. But what we do have is a very well-regulated environment for digital assets, once for digital currency since 2017. And under that, we have 23 regulated crypto exchanges now, which is way too many, but that's a different topic. And since May 1st, we have regulation on digital securities or security tokens, which folks are working through now. But I think you see the next wave coming there, and quite a few projects working on tokenization of real estate, which has a lot of trapped capital here in Japan, for example. And I think there is adoption in that space coming.
Excellent. Thank you so much, Norbert, for those thoughts. Robin, you want to keep us going? What are your thoughts?
Yes. Thank you, Norbert, for the wonderful conclusion that Japan is actually not a cashless society. And that actually comes from the reason that first is privacy. And the second is the credit system actually in Japan and United States. They're established by the credit cards. So actually Japanese users, they trust the debit cards and credit card. Well, in a very sharp contrast in China mainland, all the payment method is actually already dominated by the cashless payment directly on a smartphone like their Alipay and WeChat Pay. So there's a very deep contrast here. And when I cross borders, which I do frequently before the COVID-19, that I always have different kind of monies and cash and coins and everywhere. That was crazy. Anyhow, okay, let's get back to the topic that how crypto can actually survive or even thrive after this COVID-19. And I think actually the COVID-19 did something great for the cryptocurrency, because think about it. The virus actually fundamentally changed our behavior. We cannot travel anymore, but money has to travel. Money has to go across the borders. And what is a better way to travel than cryptocurrency that basically settles almost real time on the blockchain? And compared to the banking system, which is T+1 and T+3, which is the cross-border international banking, the Bitcoin and Ethereum, when their network is not congested, you can basically always get T+0. So, and actually after Hong Kong was hit by virus, we actually established a new business line, which is to help their Philippine domestic helpers to send their money from here to Philippines, and also some also others from Indonesia to from Hong Kong to Indonesia. So those are not the very magnificent part yet, but those already consist of like 10% of our total revenue. And I can see that they like Bitcoin, Ethereum, but 80% of those transactions are stable coins. Of course, they are not volatile in value. So I think in a middle term and to long term, this travel ban and everything like that would actually benefit the cryptocurrency community a lot. So that's my feeling. Thank you.
Excellent. Thank you so much, Robin. I appreciate that insight. Lex, do you wanna keep this going, and then we'll finish with Mauro, and then we'll move on to our next topic on stable coins.
Sure. So I think that if you zoom out of sort of like FinTech talk, the broader dynamic is that people are holding financial instruments. That's wrong. The user of the financial instrument is much closer to it than ever before. And so something like a Silicon Valley company that wants to IPO but doesn't want to pay an investment bank and therefore chooses direct listing on the NASDAQ is exactly the same thing as somebody holding the keys to their financial instrument on a blockchain. Like the distance between the manufacturer of that financial product, I'm going to IPO my company and sell equities. I'm going to create a payment unit and then have a rail on which it travels. I'm going to issue a piece of corporate debt into a market, right? So the distance between the manufacturer and the person that's holding it has been largely compressed. Like that value chain is much, much shorter now. And you can motivate it as like the philosophical, let's get rid of intermediaries because they're not trustworthy, or you can motivate it by technology collapses pricing and therefore fewer people are needed and therefore value chains vertically integrate. Pick your story. But with COVID, there's a whole bunch of stuff that governments have done to counteract the economic impact, which makes that relationship between the financial instrument and the user much closer. So like the fact that the government is giving BlackRock money to go and buy up corporate debt is an example of much closer sort of involvement between the manufacturer and the user. The idea that you would send $1,200 or you would send payments directly to an individual from the government to support their income, again, it gets rid of sort of like everything in between, and you see a bunch of fintechs like Venmo and PayPal step up in that experience. And that part is massively beneficial to the crypto ecosystem because with crypto assets, you're literally holding the asset in a completely unintermediated way, which is what makes it such a foreign concept, because we've normally had multiple service providers make it feel very comfortable to sort of hold something that's not quite it. So I do think that like culturally, we're going to be much more open to these direct solutions where, whether you're on the digital asset exchange and holding a security token, or whether you're doing trustless transactions for payments, or whether you're interacting with Web3, you're just comfortable and you understand that concept of working not with a bank, but working with the actual asset itself.
Excellent. Thanks so much, Lex. Appreciate that insight. And Maro, your thoughts?
Well, I think that at least in the short term, COVID and crisis is not a so big positive variable for the price of cryptocurrency. Otherwise, we would have seen this during these months. I think also that a crisis like this is like a kind of a threat for the new projects and for a new sector like cryptocurrency. And that electronic payment is not something completely new. It's not something that has been introduced with cryptocurrency. So it's something that was also before. So I'm not sure that there is a clear relationship, a direct clear relationship between the COVID crisis and the cryptocurrencies. But maybe I would say that in general, blockchain projects that contribute to the digitization of society, this might let's say have a benefit in the medium and long term. But I would say that this is a process that has started before cryptocurrencies. And I would say that probably indirectly, the crisis is something that might have an impact on the price of cryptocurrencies for the reasons that we were saying before. The first one is the liquidity. And the second one is clearly that in case the stock market will keep, or let's say at the moment that the bubble will burst, probably investor will look around to see if there is any other, let's say, asset where to store the value of their wealth. And if we check the Standard & Poor's 500 is below 10% year to date, while the Bitcoin is 38%, plus 38% year to date. So it's something that we may want to consider.
Excellent. Thank you all of you for your thoughts on that. And let's keep it going. We are going to end at about 5 minutes to the hour. I don't think we're going to get to the very last topic, but we'll do our very best. So the next thing I want to talk about is stable coins. And the question is, can stable coins consolidate during this crisis? Because a lot of uncertainty going on, kind of also maybe a lot of opportunity. Can they consolidate? Fabiola, you.
I start like in the almost the same order. Definitely. I will say it depends on the market, but something that is real, like for emerging economies or where the local currencies are weak and the risk of depreciation is super big, definitely. I have seen from people from the ecosystem that yes, there is adoption and use, and actually it's kind of a need. We have here a case in the Valley of a company that they have a stable coin and they are active in Brazil. And yes, people are using the stable coin to do trades. What Robin mentioned is like, we don't travel, but money has to travel. And as something curious, it depends on the countries. For example, here in Switzerland, the banks didn't close during the pandemic, but they were countries where banks were closed and people were facing difficulty to get, or for example, I remember the case of a freelancer that she was offering her services, and for an issue, the PayPal account was closed. And you know, during the pandemic, she still could work, but she couldn't get paid. And that crypto was an excellent option. You know, it's like, yes, I can convert it later, whatever, but I can still use some payment method. So a stable coin is definitely a good option, especially in countries in high risk. There is some cases, people have talked that in Iran, it was an increase on the use of crypto. Other countries in Latin America, as well, the stable coins have some traction. In other jurisdictions, maybe it's not such an urgency for them, but definitely there is a case for the stable coins.
Excellent, awesome, thank you, Fabiola. Who wants to keep us going on that one? Robin, how about you?
All right, thank you so much, Fabiola. Thank you. And also, my take on the stablecoin is definitely going to thrive. And when the Bitcoin halving actually happened, the biggest winner is actually the stablecoin, not Bitcoin, because everybody wants to, you know, just to go in and find opportunity. It will just crash a little bit and buy low, sell high, something like that. Anyhow, but what I see stablecoin is first, I would say that from our company's perspective, I see that right now more than 70% of their customers that they do the transactions, they do their exchanges, they do the expenses, they do the payment on the blockchain. That already composed of more than 70% of the transaction, of the total transaction that we see, which is pretty significant. And within that number, your question actually is, would stablecoin be able to consolidate a little bit? Because we do see that the market is crowded with different kind of their stablecoins, and because Tether, and which has, I would say, an unfair competitive advantage, is because it has been circulating on the market for such a long time, so that we don't know that if its proof of fund is truth or not, but what we know is as long as you hold the USDT, you could always clear and settle it from the top 3 exchanges, and then through other OTC method into the fiat currency. So the capacity to be able to exchange, to clear and settle it is actually the most important to support whether the stablecoin will survive or not. And of course, we have the other kind, like the USDC backed by Circle and Coinbase. It's still trying to penetrate the Asian market. And there is one particular one, which is the DAI, D-A-I, which I like very much. It's the rule is a little bit complicated, but it's very interesting. So in all that market, I can see that for those for those stable coins that actually tries to keep the value of one to one to the US dollar, I can see that they have a way continued growth route, especially in the Asia and in Southeast American market, I think due to some geopolitical reasons. So.
Okay, excellent. Thank you for that insight, Robin. Let's see. Lex, do you want to keep us going and then?
Sure.
Yep, let's go.
I think that we don't know yet what stablecoins are. There are two things they could be. They could be a money market fund or a cash sweep. So in the investment context, if you have $100 and you buy $98 worth of investments, the $2 left over will sit in a cash sweep, which is usually just a money market fund, right? And so if you're doing this at Schwab or Fidelity, and then if you want to withdraw money, the money market fund would get liquidated, turned into regular dollars and put into the banking system. In large part, stable coins play this role where you're really talking about investment portfolios at crypto exchanges, and the stable coins are what you sweep into when you don't want to hold exposure to some particular asset. Alternately, they could be money that you use to pay for stuff. In particular, something like DAI, I don't know the ecosystem well enough around Tether to have a strong view, but with DAI, you do pay for services on the on Web3, so you do purchase stuff, and it is using as a payment mechanism. So maybe those two things, the money market fund and the cash, get just conflated on blockchain infrastructure because there's no difference between payments and investing because it's just on the same network. Or alternately, they do end up playing very different roles. So for example, if I have an investment account at Schwab and it has some amount in a money market fund, I don't go and buy sandwiches using that money market fund. That's total nonsense. So I don't know how the sort of like the metaphor and the analogy is going to transfer to crypto, but I think time will tell what purpose these things will help us solve.
Excellent. Thank you for that insight, Lex. Pawel, you wanna take us off next, and then Norbert, and then Maro, and then I think we'll probably be out of time by then, but we'll see.
Yeah. Okay. Yeah, I think definitely it's a big potential, but I agree with Lex that we are not sure right now what is these stable coins and what would be the best purpose for them. But also, as we can observe on the investment markets, after the ICO were finished and just some projects are doing this in Asia, there was the time for the stablecoin and for the security token offerings, and they are very happy with the investments. They raised a lot of money. And actually, we can also observe that it can be a good usage for the stable coins, as Robin and Fabiola mentioned, mostly in the countries like in South America, where we have the problem that the denomination of the money is very big, so you need to go to the bank or to pay something with a lot of money, and with cryptocurrency it's so easy to do it and pay for your bills, or generally to transfer the money to other people. And even for the people that they have, for example, they work in Europe or in US and they need to transfer the money to their families in Vietnam, for example. So there are some options with the stablecoin. And yeah, so I think the time will show what would be the best use cases for this. And it's quite uncertain right now, but yeah, so I'm quite skeptical about it.
Excellent. Thank you, Pawel. Norbert, your thoughts, stable coins.
I just want to take a slightly different angle simply because I'm concerned about civil liberties. And we have a problem that we've given up way too much of our privacy already, and clearly cryptocurrencies are traceable, except for the privacy coins, which are disallowed in many jurisdictions for exactly that reason. So the only anonymous way of transacting today is actually still cash. And stablecoins are not censorship resistance, and I don't need to talk even about like a digital yuan in that context. You can look at USDC, which is the circle-backed cryptocurrency. It does have a backdoor, so your USDC can be frozen if you fail KYC checks, etc. So you hold that asset at your own risk, in the same way that your bank account can be frozen, your USDC can be frozen, and tying that into any social credit scores, etc., whether you behave like the government wants, I think is a very concerning thing. So ultimately, that leads us all to re-architecting the internet and moving to a 3.0 architecture. But what I do find interesting is programmable money, and we moved away from thinking about that, I think, from the early days of Bitcoin, because you have general purpose money, but you could actually create special purpose money, and there are many social uses for that. If you think about even handing out the subsidies now during the pandemic, if you actually want to make sure that the money gets spent only for a certain purpose, whether it's food or entertainment or cruise ships, whatever you want to support with that money, you could actually program that in, and that is a use case that is surprisingly underdeveloped, I think.
Excellent, thank you for that. I like your different take on that, Norbert. Mauro, go ahead and finish us off, and then and I think that we're gonna probably be out of time whenever you're finished.
Yeah, so I will try to be quick. To come back to the original question, I do not think that the crisis and COVID are helping stablecoin. If we check the market cap of the stablecoins of the last 2 months, is more or less stable. The market cap hasn't changed too much. I think that also with stablecoin there is a problem, if we can say a problem of trust. So if it's a stablecoin, I need to be sure that it's really stable. And we have some examples from the past where we have seen some really huge volatilities on stablecoin that it shouldn't be like that, because if it's a stablecoin, I expect that more or less is one-to-one. And on the last thing that has been said about the purpose of the stablecoin, I can bring our personal example. We are developing a decentralized exchange for securities. We wanted to attract, let's say, traditional finance and traditional investors, and clearly we cannot ask them to buy cryptocurrency for making a traditional investor, maybe 100K, 200K, 500K for buying a traditional digitalized stock. So we need a stable coin to operate the platform and to operate smart contracts on the platform.
Excellent, thank you so much. All right, we're out of time. We're not going to be able to get to the last topic, but I really appreciate everyone here. To all the speakers, thank you so much for your time, for taking time out of your schedule to be here. Would love to have all of you back again. Norbert, Robin, Lex, Pawel, Fabiola, Mauro, thank you. Thank you for being here. Really, really appreciate it. I'm sure that the audience loved it just as much as I did. I learned a lot today from all of you. Thank you so much. So would love to have you guys back again. And, until next time.
Thanks
for having us.
Bye.
Take
Thank
care.
you. Bye.